Hello and welcome to Crypto Bible. My name is Oliver Tompkins, and in today's episode, it's going to be an Oliver and Elliott's market update. That's right, get excited because we're going to be talking about what's happening in the market at the moment. And as always, we're going to talk about some of Elliott's coin picks for this week. Now, before we get into it, go ahead, throw me a like, get subscribed, and turn on your notification bell icon. And right now, we have a competition running. If you want to win £300 worth of sheep, get yourself in the description below so you know how to win. Right, let's get Elliott in and have a little chat. Elliott, here he is.
Ollie, how you doing?
Yeah, I'm good, buddy. Right, let's jump straight into it then. What's going on with the market at the moment? It's been a bit crazy this week.
It has. I mean, I guess starting from a fundamental standpoint, you see the Biden news was leaked about the regulation of cryptocurrency, which had essentially an effect on the market in the fact that we saw that the market was increased, and we've actually seen it rebound, to the downside in that respect off the back of that news, pretty much back to where it was. And the reason why that is because initially, at first glance, it's a good thing for crypto, right? A big economy like America, for example, are looking at crypto as a means for the future, which is something we already know, right? But when it comes to the actual regulation of cryptocurrencies, it might not. It'll be the good thing long term, but it might not have. It might not have the best effect for it in the short term. And the reason why that is because while governments and while institutions put their hands around crypto and kind of take it out of this decentralized manner, because as we go forward with regards to the market and regards to the technologies, the market's going to become less decentralized. If you look at the kind of mining power of Bitcoin, you've got three of the main miners which are over in China that take up over 50% of the mining power, which because they earn so much of the network, that's not decentralized, right? Because essentially it's owned by a certain kind of, let's say, economy as such. Now, what we're going to find is as crypto gets regulated and as things start to get that kind of cotton wool put over them by the government, we're going to find that yes, it'll be good for the market in terms of long-term growth and it'll stabilize the market a little bit more. But there's going to be all kinds of regulation that come out that affect projects that previously had potential that kind of stop them having that potential as such.
Right, okay.
As we go through that regulation or process, there's going to be the companies that adapt and the companies that are able to stay within regulation and the companies that essentially fall off. Now, this is kind of similar to what we found with and it was a very different story, but it was a very similar story in that. So you got the dot-com boom where you had a lot of companies raising finance, a lot of companies saying they were going to be the next, big thing in the tech world. But there were only a few that kind of survived as such. You've got your Apples, your Amazons, all that sort of stuff.
Yeah.
And really and truly what I see there is I see that, the companies that make it out when we do get regulated, I don't think regulation is going to be a quick thing. Yes, it's been leaked, but these things just don't happen overnight. So really and truly, we're going to see which of the crypto projects over the next 10 years when regulation comes. It will be within 5 years the regulation comes. It might be shorter, but that's kind of my projections. We're going to see that they're going to essentially grow fast, the ones that do, and become hyper growth. But the ones that don't are going to just be left behind in that respect.
Yeah. Okay. And do you think with regulation will come like a digital American dollar, and then some like stable coins like Tether could get left behind as well?
Yeah, I mean, to be honest, I think Tether, that's a conversation for a day, but for me, Tether is a huge scam. There's not in my opinion, I don't think they've got a collateralized against the US dollar. I don't think they've got that amount in reserved.
Yeah.
And that's just simply because, number one, when you're burning and introducing, essentially dollars into the system to be able to regulate the price, you've got to have them dollars on hand to do that. If the price and the demand becomes, ridiculous, that you've got to inject a lot in, which I don't think Tether is kind of they will have other authorities behind them, but as a private kind of company will have. And there's also in previous, there's been a lot of scams that have been, or a lot of the powerful people in crypto have used Tether as a means to clean money in that respect as well.
Right.
So you got like USDC, which I think is a little bit better. But, for me, when it comes to like central banks, we call them CBDCs, right? So central bank digital currencies, which is essentially what, there will come in, and this is when the regulation will come. Whether them digital currencies will be run off a bespoke technology, or whether they'll utilize existing technology in the market to be able to have their essentially CBDC, that's another way that we could go down it. But yes, in my opinion, we will see CBDCs as regulation comes out. We will see them, start to get introduced more, start to have more value, start to be used more. But what you got to take into account as well with this kind of stuff in this tech kind of terms is that a lot of the technology we use right now, it's not available to the average Joe, right? If you look at it's called the Osi data, well, the Osi Layer Model, right? And that's kind of like in tech, how the layers increase, the layers build up to the point of the end user being able to use the technology, right? So the data layer, the application layer, all that sort of stuff. And I think there's about 7 layers in that model. But when it comes to crypto, you got layer 1, which is like your bespoke cryptography, layer 2, which is building on top of existing, layer 3, which is like building inside of metaverses and DAOs. And really and truly, we're not going to really find it getting to the average user from a CBDC level until it becomes simpler for people to use. And I can give it to my grandma and say, you go and buy whatever you need to in Zara, So that's kind of like that's my thoughts. There's a long way to go, and that's why I say regulation will take a long time to come into place, because the technology is just not accessible just yet to people.
Yeah. Okay, right. Let's have a look at what's going on with Bitcoin. Should we do some screen share and show us your screen? Yeah, tell us what's going on.
Let's do it.
Right, let me bring that in. Yeah, nice transition there, Elliott. Like a professional. Love it.
Fantastic. Can you see this? Okay.
Yeah, that's cool.
Cool. Okay, so we reviewed where we were previous. We'd seen this big influx. Last time we saw it was last week. So we'd seen this big influx that pushes up to around about this region, which we previously looked at. Yeah. Now we did then see this decline in price, which was off the back of the news with the war, etc., which pushed this price down, right? Yeah. Now, the main thing for me at this point was that we kind of essentially saw a higher low made, which is exactly what we saw from this previous low here. And in this respect here, I get rid of these. In this respect, what we can see is we've made a higher low from this previous low here. I mean, you could probably say, yeah.
That's it, yeah.
There's a specific reason why this stopped here and this low was lower. It was because there was a need for the market to, or there was demand to push the market higher. Now, what I see and foresee at this point, I did actually foresee we'd rebound off here, but we didn't because of the fundamental news that that came about. So we get rid of that, and we essentially saw that we still made this higher low. Now, what I see at this moment in time is I've seen that, yes, we had the news which fully in kind of pushed the price up in that respect.
Yeah.
We've been fully engulfed back in terms of the movement. But the key thing I'm seeing at this moment in time is 2 things, really. Now, I'm not one to look at both sides of the market, but you've kind of got to. I always like to have a definite answer. But at this point, what I see, so we've got this previous low here. The main thing is that we hold this previous low here, which to as of right now, we've made a higher low here. Now, if I also get up a head and shoulders pattern, essentially what you're going to see here, this is kind of like an ugly head and shoulders as such.
Right.
But it can still count as one at this point. Now, if this head and shoulder, if we lose this region just here and don't make as high a low that we're looking for, essentially, if we go off the methodology I was talking about last week, you measure from the neckline to the roof of the price, and then you kind of target to the downside, which essentially would align quite nicely with this previous low just here. You see that? So if we lose this region just here, we're essentially going to see Bitcoin down at $34,000, which is a key demand area. So you can see how these things align up, because I didn't know when I essentially just created that from the neckline upwards that this was going to be the low that we found here. This low was previously marked out because it was just a previous low. But if we lose this point here, you can see how sequentially we're going to be seeing 34K pretty soon. On the contrary of that, what I also see if we do break to the upside, and this is why I say I'm not always a fan of giving both sides, but you've kind of got to be prepared for both sides, because if we go down to below here, the play will simply be a short down to 34K, right? Which would be essentially a sell of the market and a buy back at a cheap price. Now, what I would expect also at this point, now this is quite a shabby one, but you can see that the price right now as much as it's broken out, we're still kind of, we broke out and we come back within this region. We're still kind of coiling in here. And if we can manage to see a break to the upside of this region here, it's going to take us back to the this kind of all-time last previous high, should I say, right? And if we can get back above that, that'll show an intent to get back above this whole region that I previously marked out as well, which is quite a bullish case.
Okay.
So my thoughts with regards to Bitcoin, should I say, is them two plays. We're either going to see Bitcoin fall and break down of the previous structure that we see on certainly the 1 hour and the 4 hour, and that'll be a short down to 34k. 34k, should I say? Yeah. Or we see an intent of a break, which we potentially may have to be seeing here. You can see we've just broken this kind of structure as such on the 1 hourly, and then potentially break to the upside from there and kind of break out of this kind of resistance here. So yeah, they're kind of the two players I would say. How that'll affect Ethereum and the rest of the market, you can see that, you know, at this point in time, what I can see is with regards to Ethereum is, and everything's kind of aligned right now. So if I go into Ethereum in this respect, just here, you can see that with Ethereum, we've also got higher lows being made. Yeah. We've also got with Ethereum, the price is somewhat, as much as, I'll probably do it like that, as much as you got a little breakout here, which could have been a fake out, the price is somewhat going to do this for a little while. And then we're going to get somewhat of a decision. And that decision will essentially be a break to the downside from this point here. Yeah. To this. You know, to kind of, I would say at least probably this, you know, from the point of breakout, it'd be about here, which would be the low for Ethereum at 2.2, which would also align quite nicely with what you see how this all stacks up, because we've got previous lows that if the move happens, we'll get the move from Bitcoin, which will also align with the Ethereum move. But if I also go down to the Bitcoin move that we could see, we could potentially, if I go to this, could potentially see a Bitcoin drop of around about 10%. And I would expect it'll be a very similar, if not more, from Ethereum because of the volatility. So 11% there in that respect. So that would align quite nicely in there. But again, it's always the same kind of, you know, if we see Bitcoin break to the upside, we'll also see that happen from Ethereum, in which case the story will be much different. So yeah, I like to say, Ollie, I always like to give a predetermined where I think things can go, but we've just got to be prepared for both the sides of the market at this point. Sure.
You know, when you use the measurement, so you measure the line down from a previous point. So when you drew that line down to say where it was going to go, how do you take that measurement? How far back do you go to see? Is it like just the previous high or low, and then you go, right, that's the space that it could drop again?
So again, this is going to be something that we'll be able to educate the users with over time and the viewers. But essentially, there's patterns that happen in all markets, and what I mean by that is when I see this as a head and shoulders, I know exactly what the target will be if it gets confirmed. When I see this as what we call it's called an ascending triangle, is this right? So essentially, we've got a roof here, and essentially the roof is the floor is getting higher continuously. Got you. And what I would do then is I would essentially measure from the roof to the bottom of the region, and mark out a target from the point of breakout. Okay. Now, as much as this is a very, very sloppy one because we've had such an intent to break out, we've then seen the price respect it once again when it's come back in and find a higher low here. Okay. So I'll be confident to say this is quite, because of the news, it's broken out and then returned to the desired direction. So again, very, very similarly with the head and shoulders, you've got the shoulder, head, shoulder. You measure from the level of support right the way up to the roof. On the breakout of what would be this support here, you would essentially then get from the roof to the head to the neckline. You'd essentially then measure that breakout kind of like that. Okay. But what you got to take into account is there's certain, when it comes, because I've been doing this for so long now, you understand which patterns are bullish, which patterns are bearish. If I look at head and shoulders, it's a bearish pattern. But if I look at an inverse head and shoulders in that respect, that would then essentially be a bullish pattern, right? So you know, relative to what the actual kind of pattern is, you would know what that looks like. Now, you've also got things like symmetrical triangles where the price is kind of doing something like this, where the price is kind of coiling in that respect. If you've got a symmetrical triangle, you measure from the point of here to the point of here, and your breakout would essentially be either side of that, really, because it's symmetrical.
Okay, so there's loads to take in, isn't there? I mean, like you said, you've been doing it a long time, and you can see the patterns. Let's talk quickly a bit about Fibonacci retracement, because I see a lot of TAs use it on pretty much everything. I think it's probably am I right in saying it's like the most popular tool to use? Can you tell us, like in the simplistic terms, like why is it used and what does it do?
Yeah, so what I'll do is I'll just remove some of these from here, just so you kind of got the basis. So the reason why Fibonacci is used now, I always struggle to know why it has any value, but I know exactly why it's got any value, and it's because it's a sequential number of essentially a sequence of numbers, right? So we don't need to know much about it, but it's a mathematical calculation that's used across the mathematical world, right? Now, these numbers have essentially been as a result of this mathematical calculation that we're talking about. So my Fibonacci tool here looks different because I've changed how it looks. But essentially, what you'll find is if I type in a Fibonacci sequence, you've got numbers here. But if I also go into here, retrace, everyone's kind of thing as such is going to look like this, right? So it's going to look more like this.
Okay.
I just customize mine. Now, what we've got is with regards to a Fibonacci retracement is you've got these numbers which signify certain levels where traders as a whole get interested in buying, and particularly buying and selling in that respect, right?
Right. Okay.
The levels that traders get interested in buying and selling are between the 50%, the 61.8, and the 78.6 region. And the reason why that happens is, say for example, if we've got a price that's going up in value, right? And I'm going to do it. I'll show you this in a moment, but actually, just to go back, so I've not missed this. 61.8 is the most widely used level of the price reacting from. Okay.
What's that one again? 60 what? 1.8,
and this is called the golden ratio number. Now, I don't personally use the 61.8 because it's so commonly used. And the reason why I don't is because, say, for example, if you've got people looking to buy on 61.8 at the price, there's people, institutions, people on trading floors that will push the price a little bit lower to make stop losses get hit. Yeah. So they essentially lose and then push the price in the desired direction in that respect. So traders who buy on that level there lose. So I prefer out the two. I prefer to use it the 78.6 because you might have a candle that finishes here, and then you might have a massive wick that goes down here, and then the price goes up, right? So it just kind of cancels everyone out of the trade. Now, in terms of how we actually use the Fibonacci retracement base layer, say for example we've got the price and it's doing its thing, and then you have all of a sudden you have like kind of a massive move.
Yeah.
And you see that the price has got some resistance. What you would do is you'd measure out the start of that, essentially the start of that big move, or the start of the impulse as such.
Right. Okay.
You then work out, well, as a whole, this is 100% of the move, if you know what I mean.
Right. Yeah. I see. I mean, that's the biggest kind of point that it started off. Yeah.
Exactly that. Yeah. So if I just measure this, if I just bring this in properly, because it's not going to work otherwise. So I'm going to then measure. I'm going to take my Fibonacci tool. I'm going to take it from here to measure right to the top of that move. See that?
Right.
And essentially what I'm going to do, let me just remove this, is as a trader, and you can bear in mind, not just traders, you can use this, and I'll show you in a moment how it works live with some of the altcoins that were previously projected to, pull back, because they pull back into regions that by using the Fibonacci are very, very good buying levels.
Right. Okay.
So what we then do is, because this is 100% of the move as a whole. Sorry, I'm actually on my other account here that I use for the stream.
No, that's right, mate.
Yeah. So because that's 100% of the move as a whole, you would then wait to say, okay, right, when we've gone down here, this is now 50% retraced from this whole entire move here.
Yeah.
Now, what will happen is, generally, as a kind of rule of thumb, you're going to go into around this region, probably find some support here. I mean, it holds the price up, but then you're generally going to find an uptrend that, you're going to come down to the 78.6, and then you're going to rebound upwards as such.
Yeah.
Now, if we find that the price does something like this, it comes down at like 23.6 and then goes up, that shows the momentum is ridiculously with the bulls.
Okay.
So we're understanding that, the price has not even been pulled back to this region here, or even this region, which means that this trend upward is likely to continue for quite a while. And that's how you understand the velocity of this move. Now, if we start to see that the price gets below this 78.6 and it starts to go like this, it does signify that the market's running out of steam. And you should have stop losses set below there in that respect if you are trading the market. And then that then potentially might then do something like this. And this is where it gets quite interesting. So the way that we draw the Fibonacci is always non-negotiable right to left, right? So you see a lot of people who put on whatever Instagram, YouTube, what they're using Fibonacci, and they just don't use it right. So, what essentially would then do is if the market then turns, because bear in mind when you're going up here, you're going to probably have your structure is uptrend, right? So you're continuously forming higher highs and higher lows in that respect. Now, if the structure gets broken and we all of a sudden make a lower high as such here from this previous high, then essentially what you would do is you would take this previous high, you'd then take this new low as a whole.
Yeah.
And you would then draw from left to right as per usual, from the low to there. And you say, okay, now because we've flipped, we're going to essentially see that the market's going, all right, okay, we're going to have a lot of sellers in and around this region, much like we're going to have buyers who are in an uptrend that might have targets, which and I'll get into Fibonacci extensions in kind of weeks as we continue.
Yeah.
But I don't need to do that just yet because that's how we work out a target from the point of, selling or buying in that respect if you're in an uptrend. So
right.
In short, just to summarize from a Fibonacci standpoint, if you are, if you're in an uptrend, you want to be drawing from left to right. And essentially waiting to buy on one of these three regions, 50%. 50%, 61.8 or 78.6. In a downtrend, you want to be doing the same thing, but drawing from left to right once again, and obviously going short on that in that respect.
Right. That makes sense. Yeah. So you're going. What that was basically like to buy one, and then drawing it from the top down is when you're going to short. To you saying it's going down. Right. Got ya.
Exactly that. So you follow your placement of Fibonacci is according to the current trend structure in.
Yeah. So cool, but it could be wrong sometimes. Like when you see it go, like you said, down, and it's like really bullish, and you're going right. It's only going sort of to the 25%, but still going up, and you think, right, I'll get in here because it's a bullish thing, but it could still just plummet, right? It's not.
Yeah, because what you find is at all of the Fibonacci levels, there's going to be an element of certainly in kind of an uptrend. There's going to be an element of support that will get stronger as you go lower. Once it's broken, that's when it shows that the momentum's lost. Now, the biggest piece of advice I'd give to people if you are trading using the Fibonacci is, number one, you need to have a trading plan that essentially will outline to you exactly where you're buying and selling each time religiously. And the reason why I say that is because if you're using the Fibonacci and you put down on paper to say, I'm going to enter on the 78.6 and then I'm going to target, the extension of whatever, 1.618 or whatever. Yeah. You need to be doing the same thing every time. And the reason why I say that is because, if you're not, you're going to fall victim to just trying to get in at every point within the Fibonacci. Get a trade, you either lose it or you gain on it, and you move on and you do the same thing time and time again, right?
Makes sense, yeah. Because if you start, it's like anything in life, isn't it? If you start changing things like the lottery numbers, you start changing the lottery numbers, and then they come up, you're going to go mad. So you need to, like you say, a bit like that, stick to a plan, and hopefully you'll win out. Right, okay, cool, Elliott, that was brilliant. Love that. A little bit of Fibonacci retracement explanation as well. Let's do some coin watch. Forget the song this week because I know I'm going to give you a few more weeks to get into it. We're going to go coin watch. What's been going on? What's been looking good this week? What's on your mind?
Yeah, so Terra, Luna.
It's been going even higher because last week we were saying that we've probably seen the pump done on that. Now it went up to 80 quid in UK time because I always like to look in pounds anyway. But I remember when it was 30 quid. And then I saw it after we spoke, and I was like, Elliott said there's not much more pump on that. And I was like, 80 quid, that's still going.
Yeah, I mean, it generally, I expected that long term, this thing can go to over $200, right? But very, like I've done a lot of research reports on Terra. And their way of working is essentially using Terra as, it's one of the other. So you got Terra as the stable coin and then Luna as the backer of it. Essentially,
that's it. Yeah.
As there's more demand for the stable coin, Luna is essentially the thing that regulates that, and that obviously there's more demand, it'll push price up. Now, Luna and Terra Luna is over 100. It's just gone. It's from like $98 now, and I think we started speaking to it when it was like about $45.
Yeah,
so it's certainly
we've literally seen it. We've seen it pump.
Yeah. So that's a good one. I think there's definitely going to be a pullback to be had, but you know, as we know, this could definitely decrease in value. So could definitely continue going.
Yeah.
But that's why we say when it comes to any of these kind of stuff, like the coulda, woulda, shoulda attitude, like just don't get hung up on it, and don't also get into things that have just grown, because I'm very much the person, like I have a region that I will happily buy something.
Yeah.
If I miss that, I'll move on to the next thing, right? And I would never chase Luna above, you know, $50 or $60. I would just never do that, because the market's so dominated by Bitcoin that it doesn't matter how good a project is, Luna can still go below $30 if Bitcoin goes below, you know, 25, you know. So that's kind of where I would say. In terms of other things I'm looking at, so previously we mentioned, so it hasn't moved as much as what I would have liked, but Polygon Matic, I know there's a lot of things going on there. It's kind of it's pretty much exactly the same as what it was last time.
It's kind of been going up and down, Elliott, hasn't it? A lot of the like market has been, is it like consolidating? It's been going up and then coming down, and it's kind of been staying in that kind of range until something happens.
Yeah, I think the it's been very choppy in that respect. So, you know, we've been gaining, then losing the gains, then not really in the terms. We've got the floor. But yeah, Matic's pretty much, if I remember correctly, exactly the same price as what it was before at 144. One of the things I'm looking at recently is, and I got into Polkadot like $2, right? And I kind of held it the whole way up until like $30 and sold a little bit. And now it's at $17. So for me, the Polkadot ecosystem is going to be one that is going to grow quite significantly, and anything below $20 is really strong, you know, with the parachain stuff that's been implemented and will be continuously be implemented. I think that's very, very strong. So for me, I'm certainly watching Polkadot over probably the next couple of weeks, just to see what that looks like. Also,
I was going to say Polkadot's good for APY as well, isn't it? If you decide to earn, I know that's like one of the good interests if you do like Polkadot.
Yeah, I mean, to be honest, I think it's like 14. Was that 14% or something? APY
somewhere, yeah.
Yeah, so that's staking actually on DOT. So yeah, it's definitely okay, and like you say, for something of that kind of a market cap of 11, you know, market cap of 19 billion, nearly 20 billion, like it's strong in that respect. So I do definitely think that you know, it can, as an 11th placed kind of player.
Yeah,
APY on that's fantastic, especially for the long term, I would say.
Cool. Right.
So yeah, I think that's kind of, to an extent, where I'm at with regards to a lot of the current movements.
Decent. All right. And then any other NFTs or metaverse plays you see happening at the moment?
Not really. No. I know there's a lot of things going on in the music industry.
Yeah.
They're very much getting, NFT prices are very much getting driven by the market at the moment. So you've seen that, you know, a lot of the floor prices, or not necessarily a lot of the floor prices, but a lot of the value of NFTs have been in a bearwards trend. And that's simply because the crypto has been just playing up with you know, the kind of Russian stuff and all that kind of stuff. So yeah, the main thing for me is that just, you know, don't whale into anything that kind of just don't have value at this stage. Obviously, look at a lot of the projects on Magic Eden, a lot of them are selling out quite a lot if they've got a good community behind them. I wish I could give you more about NFTs, Ollie, but I just between me and you, it just doesn't. Well, it's not between me and you because it's on this, but it just doesn't interest me. I understand it, but yeah, it's just the value of it yet, and the value of tokenization is fantastic. But in terms of actually picking NFTs, like right now, I'm just not interested in that. So I'll have to, if we can get more focused questions by the viewers, then I can go and do some research and form an opinion.
There you go. Elliott's mouth. So guys, if you want to know anything specific about NFTs or projects, we can ask Elliott his opinion on that. So get him in the comments below and we'll get Elliott working to find them. But no, I've got an interview later on with an NFT expert with regards to NFTs in the metaverse. So it's very, very interesting to hear people's thoughts and explanations to it, because obviously there's going to be a market there, but at the moment it's just, you know, trying to get that information and educate ourselves if you are going to, you know, like you say, invest in a project.
Yeah, definitely.
Cool. Well, I think we've done pretty well today. We've actually slammed through it, Elliot. I just want to see. I was like, we've done all the coin watch. We've done some market update. We've even gone through what a Fibonacci retracement is. So we'll maybe next week what we'll do is we'll pick a tool or a TA tool that we could what you think would be a good one. We could explain it as well and do that.
30 minutes on the dot. It must have been because we relegated the song, Ollie.
I know. We've got to build it up. You know what I mean? We've got the chorus. We're just getting a few verses. Get some more people involved. And, mate, I think we're good to go. Get a #1 hit for Christmas, yeah?
Absolutely. I'm all over it.
All right, mate. Wicked. Well, thanks for your time. I'll see you next week.
Anytime, buddy. Speak soon.
Cheers, buddy. See you, man. So there you go, guys. Oliver and Elliott's update this week. Very interesting stuff. We looked at the Fibonacci retracement tool, and that's very interesting to see a little bit of an insight in that. Let us know what you want to see, what tool do you want covered. Let me know in the comments below, and we'll get Elliott to show us. What coins are you bullish on this week? Elliott just spoke again about Polygon, Terra. So great to hear your thoughts on what coins that you're looking at. Maybe we mentioned some that you like or you don't like. Don't forget, throw me a like, get yourself subscribed to Crypto Bible, and turn on your notification bell icon. We have a competition running at the moment where you could win £300 worth of sheep. So have a look in the description below on just how you could win that. As always, thanks for joining me for today's episode, and I'll see you on the next one.